Hello, everyone who's joining us today. Welcome to the Imperial Mining webinar. My name is Irina Zlasko. I'm Manager of Corporate Communications at CHF Capital Markets. We do investor relations for Imperial Mining. And this webinar is part of our ongoing efforts to educate the investor audience on the important applications of Scandium, discuss the rise of strategic and critical metals space in the world and primarily in North America, and of course provide an overview of Imperial Mining and latest updates on its Crater Lake Scandium project in Quebec. The way this webinar will be organized is we will start with founder, president, and CEO Peter Cashin providing an overview, walking us through the presentation, which should take about 15, closer maybe even to 20 minutes, followed by a moderated discussion, with questions prepared by CHF. We have, if I'm not mistaken, 4 questions, and that will follow a live Q&A where we will unmute everybody, all the participants, and I encourage everybody to use a toolbar to raise a hand if you want to ask a question live, just to avoid any messiness that might happen if all of us start asking questions right away. Or if you feel more comfortable typing in your question, you can do it in the chat box as well. On Zoom too. The webinar will be recorded. It's being recorded now and will later on be shared on social media and sent to the private list. So without further ado, please welcome Peter Cashin.
Thank you very much, Irina, and thank you for the participants in our current presentation. I'll be happy to share the screen with you. Most of you know who I am and about the company. We were founded and went public in 2018. We was founded on the basis of a multi commodity portfolio of gold, base metals and critical metals. But today's presentation, I'd like to run through a little bit of our Scandium project and some of the developments that have occurred in the critical metal space over the last month and a half. And then I'll review some of the results from our summer diamond drill program. And then we can go from there. Oops, it's not. Oops, I'm not. There we go. Okay, our cautionary statement. So we are Quebec-based. All of our properties are in Quebec, therefore qualify for Quebec super flow through when we do flow through financings. We listed in 2018, but our flagship is Crater Lake because I view that the Scandium critical metal space it provides a unique opportunity of growth and high intrinsic value. And I brought in a board and a management group that have developed critical metal projects in the past. So we are focused really on the development of the Crater Lake project. We view it as a pathway to near-term sustainable cash flow. The critical metals space in this particular instance is growing, has significant growth potential, particularly in the area of reduction of carbon footprint, lower emissions, lightweighting of platforms, but all the while maintaining the strength of the platform. Our project is open pitable. It's a large intrusive complex. We view that as a result of a low production profile, cost profile, we would be the price disruptor. The only way that we view on making market is to be the price leader. And then of course the fact that Scandium is an important alloy agent to aluminum alloys as a strengthener, and the fact that Quebec is the aluminum capital of Canada with very low hydroelectric rates, I think it has significant synergies. So just as a general rule for those that haven't heard the story, Scandium is a hardener and strengthener of aluminum alloys. It renders the alloys themselves heat and corrosion resistant. It's used in high strength and high temperature or high corrosion environments in the automotive, aerospace, fuel cells, and defense sector. It reduces carbon footprint, both for internal combustion engines, and extends battery range by lightening up the platform for electric vehicles. The issue has been a lack of reliable supply. Most of the materials come from either China or Russia, and as a result of the tight supply, prices have been much higher than can be absorbed by most manufacturers. We know that in our discussions, really to make market in this space is to have a price point of $1,250 US per kilogram versus the market price that runs in the order of 2,000 to 4,000. And that will drive growth. Currently in the market's about 35 tons. I think that's more a reflection of that's really all that's available for Western markets. So consumption demand will grow as supply opportunities grow. We think it will be well in excess of the 1,800 tons per year of consumption by 2035 that Bloomberg's estimated back in 2018. And I'll give a couple of examples why. So what does it do? The black bars, this is in essence the megapascal strength of the various alloys, and they classify aluminum alloys by what they call series, and the series are defined by the materials and the elements that they put in the aluminum for whatever application, either the fact that it's strong, or it's malleable, or it's easily castable, or it's rolled. It's more conducive to make sheet. The red bar is in essence what is an indication of what happens when you add very, very small quantities of scandium to the same aluminum composition. And you can see that particularly in the area of what they call the 5,000 and 6,000 series, you more than double the strength of the alloy by adding small quantities. And it just so happens that these particular series are those that are most consumed by the automotive, aerospace, and defense sectors. So I think that there's significant growth potential there. I've updated this recently. These are our comparables. Most of the projects are Australian laterites, so they're basically weathered rock. And you can see that the market caps are quite outstanding compared to what we are currently. Our project differs in that it's a hard rock versus laterite. We view that the metallurgy and the recovery methodology will be more conventional. Our production profile will be cheaper. And the fact that we have the natural synergies of being in the aluminum sector, I think that that's a general positive for the development of this. It's the only North American-based pure scandium play. Current sources, Russia and China. As a matter of fact, it was the Russians that found the benefit of adding scandium to aluminum in the development of their MiG-29 jet fighter program. That was in the 1970s. Quite a bit of experimental work's been done, and the benefits of adding scandium to aluminum are fully understood. But again, it's the constraint of supply that's really limited the growth potential of the market. The lower areas, potential sources, so areas like recovery of scandium from red muds, which are the process wastes from processing of bauxite, the laterite and the nickel cobalt laterites in Australia, that's the primary commodity. Scandium is a byproduct, and there's byproduct niobium, not byproduct scandium and niobium operation opportunity in the United States. Of particular interest is the fact that Rio Tinto in May announced that they've developed a method to recover scandium from their titanium waste streams from their titanium operation in Quebec. And we estimate that about 50 tons of that material will be produced from that operation. The issue is that most of the peers were uncertain about the price, the production cost point or price point of Rio Tinto. But most of our peers use a $2,000 up to $4,000 a kilogram US price to make their financial models work. We're basing, and from our discussions, we know that $12.50 per kilogram US for the product or less which will drive price competitiveness in the space. So the innovators and the drivers are lightweighting in the automotive manufacturing. In the instance of EVs, things like spot welding or wheels or EV motor components or suspension components, all in a drive to lightweight of the platform of EVs to extend battery range. But also it has a dual benefit of lightweighting and strengthening the platforms of combustion engines therefore rendering the vehicle more fuel efficient. We know that lots of money is going into EVs, and that's mostly because Dieselgate drove most jurisdictions to strengthen their emission standards. So really, this is a drive to get below the incoming European emission standards. We know that from the estimates that have been really recently published about what the growth of the EV market will be from now to 2030. What I've illustrated for you is really what the consumption potential of even a million vehicles, EVs, would consume about 175 tons of scandium oxide per year. If that growth potential is indeed realized by 2030, where the estimates are anywhere between 30 and 42 million EVs will be on the road, that consumption dynamic grows to 5,000 to 7,500 tons of scandium oxide per year. So that's a huge growth upside. So I think, like anything else, it's truly a factor of, if you will build it, they will come. Even with all of the projects that I outlined to you before, as well as the Crater Lake project, I still think that there'll be production shortfalls in scandium as it grows. It's also an important input into the manufacture of commercial airlines. Airbus SA has patents on what they call scalmalloy for both welding to replace rivets in the manufacture and the assembly of the planes. So it has the physical effect of lightweighting the plane. Believe it or not, rivets are quite a weight penalty on when you manufacture a plane. The new areas of consumption growth will be in powder form or atomized powders for use in laser melt 3D printers. So produce many of the parts, especially the cooling components of a plane using 3D printing methodology. Those lightweighting measures of the use of scandium aluminum will reduce the fuel consumption of a plane to the tune of between $10 and $50 million NPV fuel savings over the operating life per plane. Airbus is currently using scalmalloy. They've moved it onto the production floor for the manufacture of the A320neo, and that was announced back in January. And Boeing also estimates by using additive manufacturing and 3D printing, they could reduce manufacturing costs by $3 million per plane. And that's significant because most of the parts currently are cast. They have to be machined, so there's material loss. Plus there's additional manpower and energy required to get that part to spec, whereas 3D printing actually gets it to within spec tolerance without additional machining required. We know that we've got a very competitive aluminum sector. I think these are the competitive fiscal incentives that the Quebec government provides, both in exploration, where you get 50% cash rebate for a $100 expense, as well as significant refundable tax credits and tax holidays when you produce downstream production capacity and second and third order transformation of metal to oxide or oxide to metal. The big advantage is the cheap hydroelectric power rates in the province, and that's why there's so much aluminum capacity. And for those that follow the space, the Quebec government recently announced a $90 million financial support program for the development of its critical metals. And when I say critical metals, it's those critical metals of the 35 that are on the list that could dovetail naturally with existing sectors of the Quebec economy. So there's the project. We're up in northeastern Quebec, east of Schefferville. We're approximately 95 kilometers off the end of the Trans-Labrador Highway. Once we gain access with that road, we have optionality of how we can get our material to markets. Obviously, significant iron mining, hydroelectric, road and rail capacity. The red dots are all of the manufacturing centers for aluminum. And so we'd have two options: either get on the road system and get it down to Baie-Comeau, either to Portside or to establish a processing plant in Baie-Comeau, adjacent to the Reynolds aluminum smelter that's there, or to get it to Fairmont onto the rail line down to Sept-Îles, where there's an aluminum plant there, or either way, get it to Tidewater to get it along the St. Lawrence for some of the other processing plants. So that's what it looks like. It's a significant, that's about 6 kilometer diameter magmatic intrusion. The purples and the blues are, and the reds are magnetic rock. So the mineralization itself is related to magnetic minerals and what they call magnetite, which is iron oxide, and that gives your magnetic signal. It's in the same rocks that contains the Strange Lake heavy rare earth element deposit, which I found with Quest in 2008, and the Voisey's Bay nickel, copper, cobalt mine on the East Coast. So these kinds of rocks have significant propensity for magmatic type deposits, and that's what Crater Lake is. So when you look at it as a blow up, this is our regional mag map. The pinks and reds are the magnetic rock. You can see it's very broad. There's additional targets in the center. As I said, this is 6 kilometers in diameter. We've now chased the favorable horizon around for about 14 kilometers. Oops, sorry. Okay. We undertook a magnetic survey in this past summer, and you can see how much the resolution has improved from this more detailed survey. And what's become quite obvious is the targets that of significance on the project is what we call the TG zone and the STG down in here. There's a third area which you don't see on this map, but this is it right here. This is our original discovery, which we call the Boulder Lake. So what the mags helped us with is truly understand the geology and refine our model. And this is again the same mag map. In actual fact, the survey found 2 additional targets that we were unfamiliar with that require some follow-up. More importantly, it really significantly improved our understanding of the geology. Now, these results were reported out about 3 weeks ago from diamond drilling that we undertook on the TG zone. You can see it's quite obvious. We're now dealing with a kilometer-long opportunity. We actually, from the mag, we actually extended the zone by about 400 meters further to the north. So there's significant resource upside on that particular model. This is the second area that we're familiar with, and we've yet to know what these targets are about. I mean, we're talking anywhere between 75 and 115 meters of core length of continuous mineralization in the order of between 200 and 400 ppm scandium metal, or about 500 ppm scandium oxide. So very significant targets. Also, the mineralization has associated rare earths with it, which has the potential to provide us with byproduct credits on our operation. This is a revised cap structure, 102.5 million shares issued and outstanding. We've had some good price performance over the past several weeks. I have a very strong operating team, metallurgists, strategic marketing people, which help us understand the depth of the market and where the potential could be of where we're going to put our product going forward. And then my exploration VP worked with me and worked with me on the discovery of both this deposit and the Crater Lake, Strange Lake rare earth deposit. I have a very strong board, people that found mines, built mines, developed mines, sold them. Don Buber is my chairman. He runs Avalon. He's been in the critical metal space for quite a number of years, 25 years, I believe. And then Mac Watson is our technical advisor. Mac brought me in to run Quest. He's very familiar. He's a significant, well-known prospector and mine developer. So the advantages of our project in particular is it's a large, high-grade surface scandium resource and rare earth resource that can be mined open pittable. The mineralization can be recovered using conventional metallurgy. We have low projected overhead and expenses to well below the tipping point of broader consumption use. So that's offering scandium at about a $1,250 per kilogram price. We're in Quebec, it's very mining friendly. We're in James Bay convention land where the application protocol for permitting is very transparent. And I've got a very, very strong and good relationship with local Indigenous communities from my experience at Quest. It's going to be a mining footprint in order to satisfy our financial model, which is the delivery of 100 tons of scandium per year. We're only talking about 350 tons of ore production. So very, very small pits. So very small environmental impact, very small footprint. And we've got a strong management board with critical mineral deposit discovery and development expertise. So, and I think the big driving force right now is the the US-China trade war. And recently China had veiled threats about cutting off rare supplies and technology products to US defense contractors and US allies. So that's really developing a drive to the establishment of domestic supply chains. In the instance of Crater Lake, would be an important supplement to a North American scandium supply chain for these critical metals. So with that, I thank you very much for your time and patience, and I'm happy to answer any questions that you might have.
Yeah, so I think we will start with a couple of questions that we prepared. Right, Peter? And then
correct, yeah.
We
well, there's one of the participants, I believe, I don't know if Shelley Irving is.
Yes, and we will include those, and we already have a couple more questions. So let's start with moderated discussion. So you mentioned a couple of scandium applications that will be driving the value in the future. Which one or ones, if you think it's maybe 2 or 3, will be the earliest catalyst for the growth of the popularity of scandium?
I think that, well, you know what, Irina, I think I'm going to refer to an additional slide here.
Sure.
And really, it's the slide that we use to gain a full understanding, I think, of who the first adopters will be. And it's this one. And this is a simple calculation. I obtained this actually from Magna International in a presentation they gave. And what this is a dollar figure that across the full spectrum of manufacturers of what the manufacturers are willing to pay per kilogram of light weighting, of weight reduction of their platforms. And you can see by far, automotive is by far the most price sensitive, although they would be probably by volume the largest consumer. They're also would have to be required a very much lower price than $12.50 for them to be come into the market. Alternatively, when you look at the other side of the spectrum, satellite or space travel, the big concern for these guys is the physical cost of bringing those satellites or rockets into space. Payload costs are running in and around $54,000 US per kilogram. So if there's any drive to reduce even 20 kilograms of weight off of the platform, that equates to about $1 million of payload cost savings. So they're the ones that are far less sensitive. Alternatively, but they're very small consumers. Alternatively, in the middle of the market, which is the commercial and defense aviation, as well as defense sectors and helicopters, they're kind of like middle market. They have a consumption level that and a price and sensitivity that we would view as the more likely be the first adopters. So helicopters, defense applications, commercial air travel, I think will be the big early adopters of scandium. And as prices and more production comes online and prices drop for the commodity, I think you're going to start seeing the automotive, that's the conventional automotive sector, come into play. EVs, high margin vehicles, luxury vehicles are also likely to be early adopters because for them, $1,000 of additional material input really has no significant bearing on the total cost of the vehicles themselves.
I think that was a great answer. So my next question is, Imperial positions itself as a company that intends to build a reliable scandium supply chain. And so I think the interesting question would be to know if we're talking about a local supply chain, Canada, Quebec, or if you're planning on, going global and competing with such giants as China and Russia.
I think the issue right now in the drive towards the establishment of local supply chains is because of what was experienced recently in the COVID crisis, whereby we found ourselves overly dependent on foreign supply chains for things like PPE, which is personal protective equipment and masks and the rest. And that's an ongoing theme that you see even for critical metals. I view that there's sufficient market, at least initially for us in the North American sector, to more than consume what we're able to bring to market. So I think initially it'll be a local or North American based supply chain. And as the market grows, then there's European is another possibility. I mean, we're having discussions with European consumers, and a lot of the market dynamics that I presented to you are actually from Europe and not from North America for the most part. So that's kind of like what we view things will be.
Yeah, interesting. And so I think this kind of going to be a good transition. So Crater Lake is currently, to date, the largest known deposit in the Western world for scandium. Right. And in your recent press releases, you still keep mentioning that you'll continue discovering new zones of potential mineralization. So do you think there's, it's already a big project, but do you think there's a lot more blue sky potential to be unlocked at Crater Lake?
Yeah, I think there is. I mean, as an example, our mineral inventory for scandium on the project now is in the order of 40 million tons, and like I said, to satisfy a 350,000 ton production model, that's already in excess of 100 years of production. So we're not overly concerned. Really, our drive is I don't want to define the full extent of the resource opportunity in the project. Our drive going forward is to define sufficient resource for a minimum 25-year production model, and base all of our both our PEA and pre-feas and feasibility studies on that particular resource. So I'm not going to amortize the project by defining the entire system. I'm very satisfied to focus on one part of the system to satisfy our requirements of the model.
Makes sense. So my last question is actually the same that I see it across. I see it now in the chat, box, and it was submitted to us. So I think you'll answer a few people right away. When we just talk about next milestones, what we should expect and what would happen, in the next 3-6 months, maybe a year, to advance Crater Lake.
Correct. Right now, the intent is to undertake, we've done all of the surface work. We've identified all the resource opportunity on the project, at least aside from the new targets that were identified from our geophysical survey this past summer. We want to go back right at the beginning of the winter, undertake a definition drill program. So that will likely happen in around the middle of February. Should be completed by the end of March. That's about 15 holes, 2,500 meters of drilling, no more, on 75 to 100 meter centers. We're currently completing the metallurgy. We should have at least the hydrometallurgical results back by Christmas, and the entire flow sheet should be completed by the middle of February. And then we've also undertaken some strategic marketing. So those three aspects. So we're going to come up with a resource estimate, I would say sometimes in April, 43-101. We'll have our metallurgy in hand by middle of February. Our strategic marketing will be completed at that point. And those are three important items to go into a PEA. And our drive right now is to file a PEA on the project, likely in the order of July, August of next year. And I think from our discussions, that will truly put this project on the map. We've been having a number of strategic discussions about potential for offtake or partnerships. And I think that having a PEA, which is going to provide a preliminary financial model, is what's going to drive the project forward. So that's kind of like the immediate goals. Obviously, we're quite confident because we've already done some preliminary in-house costing, both about the resource potential as well as the kind of the cost base, given our metallurgical flow sheet and the costing on the operation. Really, the mining operation itself is going to be very small. It's going to be a mine, accommodations for employees, and a garage, storage garage, and all portable equipment. You don't need big equipment, and a very small power generation field. We don't want to have all of the hydrometallurgical or the processing capacity up north. We're likely going to establish it either in those aluminum centers that we were talking about, Baie-Comeau or Sept-Îles, where you've got available infrastructure, road, rail, cheap hydro, and available technical workforce. And then that's the high cost of the operation. The mine won't even account for 5% of the total capex in the operation.
Oh, you certainly answered the question, let me tell you that. I think this is the end of the more formal part, and we do have a lot of questions already submitted. So I'll just go ahead, and start reading the questions, and then after we're done with that part, if there's anybody who wants to, ask the question live, not just typing in, but actually ask it, feel free to do it as well. So let's start here. I will read it the way it is, right?
Okay, yeah.
Is there a grade cut off if one uses the price of $1,250 per kilo of Scandium?
We're $1,250. It's economic at a 200 ppm Scandium metal price, so that's about 350 ppm Scandium oxide.
Okay. Is there a direct correspondence between the highest magnetic readings and the Scandium concentrations?
We initially thought that was indeed the case because, but what we found from this past summer is there were targets that were shown to be highly magnetic, but that was as a result of just different kind of lithology containing a lot of magnetite. So our original model was there was from what we had defined in our previous work, we saw that there was a 1-to-1 association between Scandium grade and Scandium grade and the magnetic intensity. But obviously, like anything else, the more work you do, the more different lithologies you see, that kind of model falls short. But the important thing is to understand the geology. We now understand the host lithology. Those additional targets that have yet to be at least drilled. We know that there's boulders. Boulder tracing works extremely well with giving an idea of what the bedrock source of the material is. And they're showing good grades of Scandium in the order of 250 to 300 ppm area, but also in the order of 1 to 1.4% rare earths. So I think that those are interesting targets and that they're multi-commodity.
Okay. I'll mix it up a little bit. There is a question about your gold assets, which I think would be good to answer, but I'll leave it a little, for a little later. Has Investment Quebec bought any shares?
Investment, well, that's kind of the drive of the PEA. We've had discussions with Investment Quebec, and for them to get involved in a project that you require a minimum of a PEA and a financial model before they consider you as an investment opportunity. Yeah, so that's why a little bit of my drive to get the PEA done by July, August, and then they've certainly invited us back at that point in time to consider investment into the project.
I think that one may tie in with that a little bit. When will you need to raise additional capital, and how much will you need to raise to get all this work?
Right now we're considering a private placement. The intent there is to finance the drill program, the undertaking of the resource estimate and the PEA. Most of the things like the metallurgy and the prior exploration has all been capitalized. So we're looking in the order of $2 and $2.5 million of equity raised to satisfy all the requirements on the project to go to a PEA. And then, I mean, going forward, once you get past the PEA, then the big cost line items start hitting you. Things like building of a pilot plant, environmental baseline studies, impacts and benefits agreements, discussions with Aboriginal communities, and that's going forward. I mean, I've got plans in essence right out to delivery of first product, and we estimate if all goes well and we're able to satisfy the capital requirements, we should be in a process of delivering first product by Q3 2025.
I think you didn't mention it, so that was the question that was submitted, so I'll ask it. What is the percentage of insider and institutional ownership?
Insiders own 22%, and the institutions about 16%.
Okay, there is more. Any comment about the weaker market price lately?
That's just like, it's a fund that participated in a July financing, and they basically dissolved their share position in order to maintain their options. So the options that they have was a full warrant, not options. I mean, at the same offer price as the hard dollar private placement. So just checking, that seems to run through the market now, and our share price is stabilized, and our drive is to bring that up to hopefully in the 8.5, 9 cent, get it back up to where we were just 2 weeks ago in the 10, 11 cent range.
Is there a direct relationship between rare earth and scandium, thorium and scandium, for example?
In the instance, it's surprising. That's a very good question, because traditionally a lot of the rare earth projects you hear about do have high levels of radionuclides, so thorium and uranium, and that ends up being a bit of an environmental liability for your mine project plans. In the instance of Crater Lake, it has very, very low background quantities of both thorium and uranium. The mineralogy seems to be related to silicates, and there's no thorium or uranium per se associated with the mineralization. So in that respect, we seem to have overcome a little bit of the environmental liability concerns of traditional rare earth projects.
Okay. So, let's finish this part with a few words about gold assets, right? I know the presentation is mostly about Scandium and Crater Lake, but since you mentioned your assets, why not give a short update?
There's another. Can we go back to Bob Raphael's question, and I'll get back to the gold. How does one move the product out through 95 kilometers? Well, it's there were two delivery route options that we looked at the time, and I'll go back to it. Hold on. Okay, let me share. I'll share the screen again. So bear with me. Okay, so our requirements, the two options to get material to market were go to a road to Schefferville, and that's, as the crow flies, about 320 kilometers. That made very little sense because of the lakes and water bodies that would have had to have been crossed, requiring bridges. And when you build a road with bridges or having to cross water bodies, there's an additional environmental liability obligation in our permitting. And building a bridge costs, a road with bridges costs on average about $1.5 million per kilometer, which made very little sense. In the instance of the route that we were looking at here, it's along the topographic grain. We've already traced out the road from our previous work, and the objective there is to mitigate the requirements of any types of crossing water bodies. And that road would be more likely to be something like a forestry access road, which as opposed to 1.5 million, it's probably closer to 300 to 500,000 per line kilometer. So once we've gone that access road, and it doesn't have to be fancy, it's just allowing vehicle access. Once we can hook up to the existing road system, we can go anywhere. We have optionality. You can get it on the rail line, go down to Sept-Îles, or we can drive it fully down to Baie-Comeau. Okay. I'll back up now. That's about the gold. Obviously, right now, our focus, because of the economic opportunity of Scandium, we've done quite a bit of work ourselves on our gold property. SOCOM is working our base metal property, so we're being carried there. We think at this point in time, it has intrinsic value to the company, and we want to focus our exploration expenditures on the Scandium opportunity going forward. So there's things that we can do. We can either option the project to an interested party through types of option deals, so that would carry us through to exploration development. That would provide us with cash payments, so undiluted cash and shares in the participating company and a retained royalty, or it could be an outright purchase acquisition of 100% interest. So that would also give a higher level of cash, shares in the company, the acquiring company, and a retain. So the idea being is bringing more cash in, focusing our efforts on the Scandium opportunity, because each of those projects, even though they're differing commodity base, can provide intrinsic value to the company.
Okay, well, I think we will be unmuting all the participants right now in case there's anybody who wants to ask a question live, not just in a chat box. So just so you know, the audience, you'll be able to either, with video or just audio, we will be turning it on right now.
Unmute everybody. Yeah. Jack, I just answer your question. Is there a direct relationship between rare earths and Scandium? Interestingly enough, from our preliminary concentration work, because what we've done is the first step is because the minerals that contain the Scandium are magnetic concentration works extremely well. And for the most part, the magnetic aliquot contains the Scandium. The non-magnetic aliquot contains the rare earths, zircon, titanium or titanomagnetite. So those things actually have potential of intrinsic value in terms of operating cost recovery to the operation, and basically mitigates a lot of the operating cost risks to the recovery of Scandium itself.
Okay, I think
you can unmute people.
I think there's people, they can unmute themselves at this point of time.
Okay. Are there any questions?
If anybody has any questions, you can unmute yourself now and ask them.
Bob Raphael, I haven't heard back from you about interest in our private placement.
All right, you know what? Maybe we don't have. Maybe we're done, and everybody just typed in the questions. So
Peter,
that okay.
Well, go ahead.
Why? I mean, have you? Is there another private placement in the works? And let me know. I'm waiting to hear from you.
Well, I sent you a note. I sent you a note to that effect this week.
You mean the cousin note?
The cousin note, yeah.
Right. But I need dates and I need numbers and.
Okay. Well, we're potentially looking at December 15th close.
December 15th flow-throughs.
Flow through in hard dollar. Yeah.
Okay. Have you got numbers?
I will, but I'll be happy to share with them offline here.
Sure. Just send it to me. I'll be happy to send it to you, Peter. Thanks for your
Okay.
work.
Very good. Thank you. Alan Horswell, I don't know you. I see that your mute's off. Do you have anything, do you have any questions, answers, comments? Nobody?
Hello?
Hello.
Yeah, not really. I've just I came across your company through, actually through a newsletter. So that's where my interest came about.
Well,
we hope you still have your interest.
yeah.
Yeah, certainly have, yeah.
Where are you based, Alan, by chance?
I'm based in Qatar.
Oh, Qatar. Really?
Yeah,
Interesting.
Qatar, yeah. I'm British, but I've been working in Qatar.
That's interesting.
So I'm definitely interested in the, the rare earth space and the critical metals.
Yeah, I think it's a growing area, and I think that a lot of saber rattling is going, and it certainly is what drove the rare earth space in '09. I certainly hope it won't be as erratic. I think I prefer to see it to be a nice, long, slow buildup of the understanding of requirements of critical metals and wanting to lessen the dependence, Western dependence of Chinese supply or less reliable supply chains. And that the good aspect of Scandium is that the Chinese do not exercise the same level of market control that they do of rare earths. I mean, they don't produce enough material, I think, to have a controlling position. So in that respect, I think it'd be very good. Another aspect, though, the issue with rare earths is, I mean, it was a real boom market and crashed just as quickly as it went up. But all through that phase, there was not a single major mining company that expressed any type of investment interest in rare earths. The fact that Rio Tinto made their announcement about intentions of commercializing scandium recovery and then the production of scandium aluminum alloys tells me is the first indication that a major actually views that there's a significant market opportunity in scandium aluminum alloys, next generation high strength alloys going forward. So I think that's a little bit of a light at the end of the tunnel for scandium and for its opportunity going forward.
Can I ask you something, Peter? Hopefully, we're going to see the end of this pandemic, God willing, in the next few months or half a year. But if not, I mean, does this affect the work that's done on the project? I mean, the people who work there.
No, we've had to institute some significant COVID-19 health and safety protocols. We had a crew up there this past summer. The issue was that although it was costly to get on the project, because normally our drop-off point before we go to the project is Cheverville, and all the indigenous communities restricted Southerners to get off a plane and get off the tarmac in Cheverville. So what we had to do basically is we hired a commercial plane. We tested all of our employees before they got on site. They landed in Cheverville. We had a bus from the float plane base that picked up our employees. They were sealed in a bus, went through town, got on the plane and off to the project. And we had to do that both for our exploration crews as well as our drill crews. We did a small test diamond drill program in parallel to the geophysics and the mapping and prospecting that we did. And I'm happy to say that we had absolutely no issues with COVID, and so that works. It's very effective, and it's our intention to apply the same level of strict protocol to any future exploration on the property.
Okay, thank you.
If we don't have any other questions, then with that, I will like to end this webinar. Thanks everybody for joining in. And if you do have any more questions, that are more one-on-one, please feel free to reach out directly to Peter or to CHF Capital Markets, and we'll be here to answer and facilitate any discussions. Thank you and have a great rest of your day.